Welcome to Capital Spreads Weekly Update. Today is Wednesday the 8th of February 2012 and the week so far. Well, the markets continue going higher and there seems to be a couple of reasons for this. The first is the US and the second is Greece. The US corporate season continues to be providing better than expected results from many companies. Not only that, we had a US non-farm payroll figure come out on Friday, which was much better than expected. Now this has given quite a strong boost to the US economy, with the belief that the US has now turned a corner and we could possibly see a follow-on effect and a filtering through effect through to the rest of the global economy. Secondly, surprising as it may seem, many people now believe that Greece could be at a final resolution. The details and the deal is still being struck out as we speak in terms of what the debt restructuring will be for Greece going forward. However, many people believe that Greece has done enough to actually warrant the next tranche of its bailout, and not only that, going forward it will actually be able to implement many of the measures that it has promised to do so, which will hopefully draw a line under the problems that Greece seems to be having. However, looking closer at home, the UK continues to struggle at the moment, with many people believing that a further round of quantitative easing is possibly still due from the Bank of England. We have, for example, Bank of England rate decision coming out tomorrow. Although many people aren't expecting a change in the rates, many people will be watching closely in terms of what will be happening in terms of quantitative easing going forward. The volatility in the markets overall has died down quite a lot. We have the VIX index, for example, trading around 17.5. Just towards the middle of last year, we were looking at in the high 20s into the low 30s. Now that obviously is having an impact on many people that want to be getting in and out trades relatively quickly, as it means that they're having to hold onto positions for much longer, making the short-term profitability a lot harder. In terms of the FTSE as it currently stands, it's trading around 58.82. It's down about 5 points or so on the day. The FTSE, along with many of the global equity markets, have had a strong rally over the last few weeks or so, off the back of strong optimism that we are having. Many people are now expecting 6,000 to be the short-term upwards target that will be hitting the FTSE. However, 6,000 is actually quite a strong pivotal level for the FTSE, and as with the 5,500, the 6,000 level is very hard for the FTSE to break away from. There's been a number of occasions previously where it's gone up to about 6,100, only to get sold back down into the mid-5,000s or so. So short-term, you're looking, as I mentioned, at a target around 6,000, then up to about 6,100 before you're going to hit resistance. If it fails from here, looking at support around 57.50 in the FTSE, and then possibly down to around 5,600. Gold too continues to remain quite topical. It continues to have a strong run, a run that it's had since the beginning of this year. Now this is partly being driven by dollar weakness, which in turn is being driven by confidence in the equity markets, which has led to many people selling the dollar. As a result, you're seeing gold go higher from here, and there seems to be a similar story for oil as well. Now bear in mind, both those commodities seem to be priced in US dollars, so as the dollar weakens, you're having an adverse effect there. However, also bear in mind that with an improving global economy, gold also seems, oil I should say, also continues to look like it might be breaking on the upside from here. Combine that with the fact that there continue to be ongoing tensions and escalations with Iran, you could certainly see oil going higher from here. In the short term, you could possibly see oil trading between Brent oil trading between 110 and 120 and 110. However, any break from either side of that range could certainly see oil going a lot higher or a lot lower from there. In terms of the week going forward, we have a number of figures over the next week or so. We could certainly move the markets around a bit. We have, for example, UK industrial production out tomorrow, but the bigger figures to be watched will be both the Bank of England rate decision as well as the European Central Bank rate decisions out tomorrow. Both are expected to remain unchanged. However, they will be very closely watched in terms of any clues to what the stance is going forward. We also have on Friday UK PPI and US trade balance figures, while next week we're looking at UK CPI figures on Tuesday. Now many people are expecting UK CPI to remain around 5% or so, and it doesn't look like that's going to be changing anytime soon. In terms of client activity, many of our clients have sold into the rally we've had recently, believing that it's possibly overdone. So they are short the Dow, the S&P, the FTSE, the DAX and so on. They continue to hold into long gold positions that they had for a very long period of time. However, they have now actually gone short silver, so the two commodities seem to be offsetting each other. They also continue to hold long positions both Euro Swiss as well as dollar Swiss. In terms of the theme of the week, I would say the theme of the week would be very much the wait and see stance being taken by many investors in terms of what's going to be happening with Greece. I think many people really want a line to be drawn under this, but they need to see some clear messages coming out of Greece before they decide to jump onto the risk-on bandwagon. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.